It's far more risky to be an employee than it is to be a business owner. Far more stressful, but it's far more risky from a income perspective to get a paycheck than it is to own a business.
That might be the punchline. I mean, yeah,
Yeah.
I think that's what we're appealing to here with our listeners is that many of us are employees, and I don't know that we know how risky that is. This is Internal Rate of Return with Amanda Alexander. In today's episode, we meet Robert Preston. Robert is the co-founder and CEO of Climb Capital and Unhitched, who specializes in buying and selling RV parks. He got his start through wholesaling and flipping single-family homes, and this quickly escalated to recruiting investors and purchasing multifamily housing and eventually mobile home parks before transitioning over to the significant upsides that owning and operating RV parks has to offer. Outside of real estate investing, Robert is a proud husband and father of four. He and his wife are licensed foster parents and have fostered many children over the last few years. Robert is a graduate of Clemson University, I believe that's Go Tigers, and served
hmm
15 years in the U.S. Marine Corps as an MV-22 Osprey pilot. Very impressive, and thank you for your service, all before founding Climb Capital and Unhitched. Robert, it is a pleasure to have you. Welcome to the show.
Thank you, Amanda.
Thank
Happy
you.
to be out here.
I'm excited to dig in here. I like to start with a check-in question, and that
Okay.
is, what are you feeling grateful for in this moment?
Oh man, right this moment is I live in Pensacola, Florida, and there's not much humidity today. So it's starting to be like the Florida that everyone sees on the postcard, and you can go outside and it's warm and it's not humid. So I'm super grateful for the beautiful weather today.
Oh, very nice. I have somewhat of an appreciation for that. Like the whole, you take a shower, but then you go outside and you feel like you've taken another shower. So
Absolutely.
yeah, I guess I'm a little spoiled. I'm California born and raised with our very even 70 degrees,
Right.
well, 60s and no humidity. So,
Yep.
but I'm sure you've experienced quite a few climates. I know you served in Afghanistan. I'm sure I
hmm
have a cousin who was there for a few tours and it's very, very hot there, but dry
It
heat,
is.
right?
It's very dry, very dusty most days.
For our Burning Man friends who like to go to that. Can you imagine people pay or do I have a lot of friends that go, but they
Yeah.
actually go there for pleasure, which is an interesting way to spend some time. So,
Yep.
what does your real estate portfolio look like today?
Yeah. Great question. So it changes pretty rapidly. We just sold a couple properties. We're in the process of refinancing some. We're buying a few, but as it stands today, we own and operate 11 RV campgrounds or resorts. We're building our 12th, which are first ground up development. We've got three more under contract that we'll purchase. And then we still have a small portfolio of what I would call boutique multifamily, some historic buildings. Those properties really only total 67 units in the multifamily side, but on the RV side, we're somewhere around 2,000 sites.
2,000 sites. That's incredible. Well, it's the units within the 12, it sounds like, that
Yeah,
that you own. And are these all in Florida or geographically, where are these properties?
yeah. No, primarily southeast. So we have a property, farthest north we have was one just south of Cincinnati. We have one in the vicinity of Charleston, South Carolina, quite a few in Alabama, Tennessee, and Florida. And we just sold a property, but we did have one in Page, Arizona, which is beautiful, right on the Grand Canyon, Horseshoe Bend, Page Lake. That was awesome. So we unfortunately just sold that a few weeks ago. It was a great return, but I do miss going to that property.
Oh man, you were inching your way closer to our side of the
I know.
country. But so was it just the right opportunity to sell, or what was the driving decision behind letting go of that
Yeah.
one?
Yeah. It was one of those like offers you just can't refuse. So we 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 held it just over a year. It was not expected. We bought it. I think it was in May of last year. Operated it, turned it on pretty quickly, and we sold it for double what we bought it for last year. So we couldn't really pass
Wow.
that up.
You said from May to wow. So in like a year, it
Yeah.
doubled. When you say,
Yes.
and we'll get a little more into this, and then I'm gonna go backtrack a bit, but
Sure.
when you do the value add on an RV park, like how does that look? Does that mean like installing a pool or amenities? Does it mean upgrading? What does that look like?
Yeah, it could. It absolutely could. And the way that we think about it is almost in like a phased approach. And what's different here is some of these things can be done very rapidly. And so for us, first phase of repositioning a property is really just on operational and marketing and tech stack opportunities where, a lot of times we'll be looking at a park that doesn't have a website, doesn't have online booking, is not using, dynamic pricing. And so we can implement that very quickly and adjust prices. I mean, quite literally at a daily rate, adjusting, your rates. And so you can affect your income almost instantly. And then bringing common practices and policies and rules. And I'm a big fan of traction, EOS. We implement that system at the property level. So I would call it kind of phase one that really doesn't take much capital generally, and it's not, physical upgrades. It's just pure enterprise type of bringing, I would say, professionalism to what maybe is, mom and pop operation. And then phase two is where we start to look at, the plant, right? Look at the infrastructure, adding pools, upgrading sites, amenities, et cetera. Your typical, what you would say is, flipping component of upgrades. And then phase three is generally expansion. Can we add more sites? Can we build more new units? And so that's how we usually attack it.
Nice. I'm taking some notes here. So phase one is the operational efficiencies. I love that you do EOS at every property. So it's like its own, well, it should be treated as its own business.
Mhm.
And then phase two is about like infrastructure amenities. Phase three is about expansion and maybe adding or building
Yep.
new sites. So when you talk about this, I'm wondering, and pardon my not knowing, I should probably spend more time in RV parks because I always dream about it. But then I have a 2-year-old and a 9-month-old. I'm like, I should have
Yeah.
done this before, or maybe, like
No,
when,
you're getting it just the right time to do it.
okay, I'm sure they would love it, but just all the, well, actually, I need an RV first.
There you go.
But when I think about an operator for an RV park, like it's not like a property, well, it is a property man. How does that work? Because you're buying in typically maybe a little more rural areas,
Yeah.
or how does
Yeah.
that look?
That's, so right. I think there's a lot of talk around RV park and RV park investing right now. And, there's a lot of like, hey, this is great cash flow, these great returns. And those are true. But the flip side is what you just mentioned. It is a lot of work. It is real estate and you are running a property, but you're running a business. And that's why the EOS correlation coming in with bringing, the US system from an operating perspective is, in my opinion, pretty key because this is not a hire third party management company. Typically, you can't just take any management company that's put them in place. It actually is you're essentially running a business, a daily business. So that is a significant increase in workload and risk and effort, and that's why you see generally, significant higher return in this asset class because there are higher barriers to entry. Property management, I would say, is number one, if not two, next to institutional level debt that is very difficult to find and source.
That makes sense, and I'm trying to like wrap my head around the complexity of this. So, do you have someone on site for each of your 12 properties, or how does that
Yeah,
work?
yeah, no, yeah. So, there's a lot of variability in these properties. Some have one, team member, some have team of six, and some properties have 60. So depending on
Wow.
what it is and where it is and the time of season, that can fluctuate there. But for us, there is always at least one general manager who is oftentimes lives on property or very close, and they have P&L responsibilities back to us for running and operating that specific site.
I see. And how do you, it seems really niche in a way because these are spread out. It's not
Mhm.
like you have them concentrated in one part of the country or even, in the region. And how do you find those people?
Well, I think is that's our secret sauce, and it's not a secret, but I think we do a really great job of hiring. I'm a huge proponent of books. And so, uh, what is the book that I use? Look down here. So we use, I stole the hiring system from one of the books I'm a big fan of. And what we do then is when we put out the crafting, I'm looking for a person that has the character and drive, not the resume. And
Mm,
so we write our job offerings more along the lines of, hey, do you want to be an entrepreneur? Do you want to own your own park in the future? So along those lines, learn from us, be part of our system, take responsibility, take control. And so we tend to attract people that are much more entrepreneurial than your typical manager role. And so, again, oftentimes we'll get people who may apply with 30 or 40 years of managerial in their, even property management in their resume. Sometimes it's almost a turnoff to us, because if you're doing the same role for 20 or 30 years, you're probably not aggressive enough and don't have enough drive to take leadership of something and be independent. Like you said, they're fairly remote. So you're not like your day to day coming into the office and you getting that type of feedback. So you have to, be able to be independent and self-driven. And so those are the things that we're looking for: the entrepreneurial spirit, self-driven, the pride of ownership. And I don't think you need the experience. I think we can bring that from our systems into that. And it's been really successful for us.
That's great. That is a great secret sauce to have, and it makes a lot of sense. So you're like attracting a very specific characteristic, which is like being entrepreneurial. I assume I love books too. Like you've probably read E-Myth, and I've also
Yep.
read the Gino Wickman Traction,
Yep.
and having EOS in all your sites is really cool. So, speaking of being independent and a driver, I'm going to now take us way, way, way back to
Okay.
kind of go through your Robert Preston's journey to becoming this RV mogul. Before all of this, how was money talked about in your upbringing?
Yeah. So I grew up as a farm kid, Western New York. My friends were Amish, and, we grew up very rural. I would say, looking in hindsight, relatively poor for most people's standards. Dad worked several jobs, worked at the feed mill, drove truck at night, and we raised cattle. And so we didn't talk about it that much. But it just wasn't, they come up. Oddly enough, I knew when things were going poorly because we'd have more steak. And so
Wow.
those, because we raised beef when we couldn't afford groceries, we'd just go out and, harvest a cow. And now we had the steak for every night or else. It was a weird predicament for me
Yeah.
growing up
Yeah.
as a kid. So we were very blessed in that manner. So we didn't talk about it that much growing up as a kid. It wasn't demonized. It wasn't glorified. It just kind of was more about working and doing the job the right way.
Yeah. It's turning out to be a theme for folks in our generation that, money is not talked about. I think probably even now, like money just isn't talked about in families. And that's why having podcasts like this for anyone interested is, I think, a blessing, because I wish I learned all of this 10, 20
Yeah,
years ago, and I just didn't. And so,
for sure.
I read Rich Dad Poor Dad last year. So that's what really
Okay.
spurred me into all of this. But, being a farm kid and being rural, and I imagine that just instilled a really strong work ethic because you probably
Yeah.
helped out. Do you have siblings, or was it just you?
No, I was the oldest of four, so I've got a younger sister and two younger brothers.
And I'm sure you all helped out.
We did. Yep.
Yeah.
And
Yeah. Have you ever brought your four kids out to the land where you grew up on?
yeah, we actually RV up there. Typically, we spend 2 or 3 weeks out of the year. My father still is up there. We have land, and so we go up there and help and play, and it's not hot. So yeah, we do that a lot. And then we live on a small farm here in Florida. We have 20 acres and just
Wow.
enough for the kids to have chores and things for them to do and have responsibilities.
I'm sure that they may do some of the chores begrudgingly, but I really do believe this starts something really important for the kids in your family that is going to take them a long way. Like it'll help them go farther in life later.
Absolutely.
That is so cool. And I was also thinking, because part of my goal with having enough real estate or other investments is to ultimately go and live in the countryside of Macedonia where my spouse is from. So it's interesting how, here I am. I'm born and raised in the San Francisco Bay Area. And I'm seeing more and more, we have the rich families are out in Marin, and they live
Mhm.
on, more of the countryside. And it's like the folks who are striving for wealth actually want to go back to the land. And it sounds like
Yeah,
your family gets to do that, which is it full circle.
it is. When we were starting having children, we lived right downtown here, really nice house, all the convenient stuff. And it was just, I don't know, you just start to get this feeling like I gotta get out of here. I need some space. And, it's not nearly as nice as a house as I used to live in, but I have all this space. And And it's good for the kids to have things to do. It's good for them to be dirty. It's good for them to go out and play and get sweaty and play with sticks. It's good for them. And it was good for me.
A beautiful way to grow up for sure. I'm sorry, I'm taking a moment also to reflect on what you were saying about when you guys didn't have much, that you would eat steak, whereas like that's more of a luxury for
Yeah.
other people. But I can imagine you'd get sick of it if you had to eat it over and over and over again.
Yeah.
But
It's just
int-
very ironic that I didn't realize at the time that I'm, 40-year-old and going, eating nice steak dinners. Like, this is what we did when we were poor.
right? I was just gonna ask you, how do you feel about steak now?
I
Having,
still love it. It's still great.
yeah. Oh, me too. Medium rare. And yeah.
That's right.
But I also love cows. Like I think that they are so smart and cute. And so I try not to make the mental connection. Anyway, back to the real estate. So when you did become more mindful about money, maybe as a young
Mhm.
adult, can you share about a time when you had the least amount of money in your bank account that you can remember, and what your
Yeah.
mindset was?
Yeah. There's probably a lot of times if zero is the least amount, that happens
Oh,
fairly regular. So my journey into, I think, understanding money started with Rich Dad Poor Dad. I started, obviously understood interest, understood some math through high school. Then I went to Clemson and I got my degree in economics. And so I was learning, just pure economic theory, micro, macro, all that type of stuff. And I loved it. I was like, oh, I just love the relationship that existed between supply and demand, the simplest of things. And you could apply that to relationships and you can apply that to so many things. And so, but then I read Rich Dad Poor Dad and it was like, whoa, you know, this is a different way of thinking about all these principles that, you can apply. And so that was the beginning. And so in college, I like attempted to buy an apartment complex and of course it didn't work out, but it was pretty cool learning. And then went off the Marine Corps and got pretty consumed with the aviation part of that, just the amount of training that was required. And then in Afghanistan, you know, was of course consuming time wise, but we also have a lot of dead time if you're not flying. And so I started, just tearing in and reading tons and tons of more books as fast as I could on it and having discussions and brainstorming with other entrepreneurial type of guys and just really catching that bug. I don't know how, so I didn't answer your question yet, but so, so certainly that changed how I started thinking about money from a personal level, started selling things that I shouldn't have owned, like jet skis and trucks and crazy things that were way too expensive at the time, and started investing. And so that was a really, really monumental life change. But even with that, there still have been some times after that where, it gets to the point of where you have no money, right? No money in the bank account. But this time was because maybe I had invested everything into a project, into a house, into a flip. And so the thought process then was a lot more, it's not having money has never really scared me, which is weird. But it was even less scary this time because I knew I'd made the right decisions and pointing the things in the right path and I had the right expected outcome. And so it was fine to maybe not have any money or to go into debt because I was going down the right path. For a short period of time, I had to, deal with that pain. But then, I'd sell the house that I was flipping as an example and make it all back and then dump it all into the next one. And so that process taught me to underwrite much more carefully at the beginning because I knew I was going to face that pain at some point down this investment path.
Yeah.
Does that
That
make sense?
makes it makes a lot of sense. So you didn't, have a deficiency in money because of being irresponsible. It's because you're being very responsible and thinking about, how to maximize it the next time and the
Yeah.
next time. And, I'm thinking about the younger Robert and how you said in college you were trying to buy an apartment complex and it sounds like you've always had somewhat of a vision, like even from a younger age, because for me, it wasn't until I had kids and I'm working this corporate job that it just clicked for me like, okay, I need to have a different vision for my life, and then
Right.
catapulted me into learning about all this stuff. But you could have been bored in Afghanistan and played video games. You chose to evolve yourself and your picture of your life later, even maybe before starting a family. Did you have kids at that time or your wife at that time?
No, no, I didn't, which made deployments much easier.
Right, right. I'm sure. And but still you really did have this
Yeah.
drive that was in you from pretty early on.
Yeah. I think the entrepreneurial gene or spirit to some extent is somewhat hereditary. Like it's just some people have it and don't, and doesn't make anything, doesn't make either one right or wrong. But to me, the building of a business or thing, I just want to build something. I don't even care if it makes money. Like back then, I didn't care if I made money. I just like wanted to build something, or if I see something, that makes sense, like, oh, that makes sense. Let's do that. Whether it's, I don't know, working out, right? Reading a book on how to work out. Just if it makes sense, let's try it and see how it works. It's
Uh,
kind of my mantra. But yeah, I
Well, it's
think the vision has shifted significantly through the years, but the idea of trying to create something out of nothing has always been very attractive to me.
yeah. But it also sounds like you've been extremely focused, although it has shifted. Because if I understand, did you start investing, like you doing flipping and wholesaling maybe 2013, so like about more than 10 years
Yeah.
ago?
Yeah. So it was 2012. I came back from Afghanistan and then was in a lot of consumer debt, a lot of toys. And that's where I started, getting out of it, re-leveraged at Port Ed. So yeah, I started with just wholesaling, flipping contracts, and then flipping houses.
Yeah. And then you were smart to then go into multifamily. What year did you get into multifamily?
We bought our first small mobile home park in 2015.
2015. Okay. And
Yeah.
did you do that on your own or with partners?
Just two of us. So two partners, or two of us. So one partner.
And did you like what did you leverage to learn about mobile home parks? Now there are like courses and
Oh
people
yeah.
who are ready to mentor, but I don't think that was around in 2015.
Yeah,
Or
not
maybe it
that
was.
much. It was a little bit. So I did go down that route. I think at the time it was actually Rich Dad Poor Dad Education. It's subsequently changed many brands, but I did spend some money on some mentorship and some classes, and one of them was commercial real estate, and that's what we took and went from there.
Yeah. Okay, so the first one was a mobile home park in 2015, but if you don't mind, I do want to go a little bit
Sure.
into the journey with buying apartments because I believe you went in for a C class, and then if I heard correctly, when you were interviewed by Eric, there was a time I think in 2020, so just a few, 4 years ago, where you noticed that the brokers were starting to talk about pro forma, like really just
Yeah.
tweaking the numbers in a way that just didn't feel right. And I
Mhm.
really, I think that's great that your radar went on and you're like, okay, I'm going to make a change because I can see a shift happening in this space.
Yeah.
But I do want to go a little bit more into like what types of apartments you bought and how
Mhm.
exactly you tackled that, just because that's kind of where I am right
Yeah.
now.
Yeah, absolutely. Great question. So again, not really having much money or resources or connections in the beginning was most of as an example, our first mobile home park was only 16 units. I bought it for $200,000. Um, but it was grossing almost $6,000 a month in rent. And I was like, wait a second, I could buy this house and make, $900, $800 a month in rent, or I could buy this. It's not pretty, but make it work. So our first multifamily purchase was actually a 60 unit, which was pretty nice size for us. But we bought that in receivership. We basically bought it on a foreclosure from a bank. So it was class C, maybe D, you know, class C area, nothing special, pretty beat up, pretty vacant. So we had to put a lot of money and effort into that. And so, most of our multifamily asset class was in that, C and B class stuff, older vintage, uh, not always out of foreclosure distress, but probably not well run when we took it over. And so we would take it over. And that's, I think, looking backwards now, where we figured out this operational part is pretty key. Phase one, fix the operations. Phase two, starts fixing the building. Um, and so does that answer your question? So the first one was in 2016, 60 unit garden style apartment.
Oh, garden style apartment. And did you do that with a couple of partners as well, or syndicate, or how did you do that?
So yeah, so I think that was our first syndication. Yeah. So that was our first single asset syndication that we did a PPM, did the operating agreement, and we raised capital. So that was an eye opener too. Like, oh, wait, we can raise capital. We can buy things that are more expensive than what I have in my pocket.
Yeah, yeah. Did that feel scary at all for you, or was it
Mhm.
just, this makes sense, like you said, if it makes sense, you just go for it?
It- Yeah, certainly there's a component of like, "Oh, this makes sense. This is what everyone, this is what I've been taught. This makes sense. We've done our due diligence. Let's do it." But it's still very scary to start going. And at the time, I thought about it as asking people for money, which is the wrong mindset. But, and not knowing where it's going to come from and never doing it before, you don't realize maybe how much money is actually sitting out there that people you don't think would have it actually do. So learn a lot through that process, but certainly was scary the first time.
Do you mind me going a little deeper there now and
Sure.
selfishly, because right now I am getting invited to be a co-GP, very small role, but some other parts of the project, but also capital raising as one of my main contributions. And
Hmm.
you're right, I'm trying to shift my own mindset from this is asking for money versus presenting an opportunity. But because
Hmm.
it's my first time and I did vet the deal, I've vetted the team, I feel really good about it. But at the same time, feeling good and actually having a track record with the team is a different thing. So I'm going in a little bit on faith,
Hmm.
although I did my vetting, I promise. It's just, how did you approach, I guess, presenting this opportunity to different people in your network? And then when did that shift in mindset come where you said, oh, wow, this is actually, there's so much money sitting out there and from unexpected places?
Yeah, I think it is talking to enough people and surrounding yourself with people who have done it, getting the reinforcement that no, you're not asking for money. You're not asking for a loan like a gift. You're not asking to go, so you can go down the store and buy some candy, right? You did a lot of work. You did a lot of effort. There's been a lot of time and effort to present a rare opportunity to invest into this property because of the time and effort you put into that. And that has value. And what you're bringing to that person has value. So it is truly, in actuality and in presentation, it is presenting an opportunity that not everyone gets to have. Particularly if it's an accredited investor only, type of syndication, depending on the structure, right?
Yeah.
Literally, there are people who can't invest in this. And you prospective investor, have that opportunity to do that with us, and we're putting in the work and effort. So certainly that is the internal voice mindset that you have there. You present it much nicer than I just described it. Um, and then it's when you get that, then it's a pretty simple for me. And then it was like what I did was I created a spreadsheet, very simple spreadsheet, and I just did, maybe an hour worth of brainstorming in my head. And I went through my life based off of, school or based off of jobs or based off of clubs or hobbies. And in each one of those ways that I categorized my life, I went through all the people that I thought might be interested, just might, anything that might be interested. And I put their names down there. And surprisingly, that list was a lot bigger than I thought it was. When you sit there and first start to think of who should I ask, you come up with very few names. But if you go back through and kind of resegment your brain and do that, you'll get a much bigger list. And then you can start kind of going through that more methodically and external to your own fears and go through that. Not to get too deep, right? But everyone, you realize when there's fear, any type of fear, which you just said you have some fear, right? Your brain literally shuts down. It becomes less creative. It does less things in preparation for you to face whatever fear that is. And so by spending some time and thinking about it, you'll be a lot more creative. And I think your list will be a lot longer. And then next time you just continue to, now you actually have a CRM, right? Now you actually have your list that you continue to add to. And it's more of a checklist instead of trying to think through it in the heat of the moment, so to speak.
Yeah, that makes a lot of sense. And thank you. I do have somewhat of a list, but then what, like my next step. So some of the folks, I'm just going to set up time and go through the pitch deck and be like, what questions
Mhm.
or to help me tear this apart? What about
Yeah.
this seems or brings you hesitation? And I'm curious, how did you tackle the list once you had it? Did you make phone
Yeah.
calls? Did you go have coffee? What did you do?
Yeah. I mean, I try to, it's aggravating. No one likes to have to go through a long, well, we'll call it pitch, right?
Yeah.
If they know you're not interested or they're not interested. I went through this yesterday. It's pet peeve of mine with brokers who bring us BOVs. And it's like, I just want you to tell me how much you think it's worth and how much you can sell for. This should not take a 30-minute conversation for you to reiterate to me all the qualities of my property that I already know. Right?
Yeah.
We spent 25 minutes of you telling me about my property that I own. I don't care. Just tell me, how much it is. So that's a long way of saying my method is put together a very thorough, thought out pitch deck that answers as much questions as possible. Send it to them via email. Hey, here it is. Let me know if you know of anyone that'd be interested. I don't ask them if they are interested. Do you know of anyone that might be interested in this? If they are, they'll say, yes, I am. And then you might also get a referral out of that. And then, over time, of course, you have your stable investors that are always going to invest. And, those are much quicker conversations. And then if there is interest for me, then yes, I set up a one-on-one call. We'll go to lunch or have coffee, and also host of webinars, where you present it to a larger group. And that maybe then goes on to the one-on-one individual. And some people just say, yep, I'm interested. Sign me up, send me the paperwork. But it's a long way of me saying, just give them the information and let them have it and digest it first before you spend a lot of time and they spend a lot of time for y'all to get together on something that there's no interest with to start with.
Yeah. Okay. That's really helpful because I was hesitant to just send the pitch deck without talking to them about it. And so now I feel a little bit better, especially the people I'm talking to. They're like from corporate. They have,
Yeah.
worked probably with me. And, it's been a transition. Like I have an Instagram page now that's called Amanda the Investor. And
Yeah.
I did that purposely to start to introduce myself to my network as somebody who invests because they know me as PharmD or chief
Yeah.
of staff or whatever
Yeah.
it is. And so was there a moment for you where you transitioned from like, I'm a Marine to I'm an investor and this is how you should work with me?
Yeah. That's a good point that I sort of forgot or glanced over. That first, introduction is pretty simple in my opinion. It's, hey, I'm doing this in my life. Like, me as the pilot, or I'm sorry, I forgot what's your profession?
I'm in biotech, so I'm a
Okay.
PharmD. Yeah.
Yeah. So, me as, PharmD, but I'm doing these other things that I'm really excited about. And I would love to start sharing some of the things that I'm doing and learning and have these opportunities. I.e. this podcast obviously is, a phenomenal way for you to share that new path that you're going down. And then very quickly just get to it. And here it is. Like, I don't think there has to be this long,
Journey. Yeah.
evolution of who I am now. I'm doing this, and that's totally fine. And I'd love for you guys to be part of it. And you're probably very interested in something that's very interesting to me too.
Yeah. Okay. See, keep it simple. I like your
It's simple.
approach just generally. Yeah. It doesn't need to be overthought or over engineered. And I'm with you. You don't want to sit in a 20-minute presentation. It's like, get to the numbers, get to the point, and then we'll decide if we want to go deeper. Did you ever have an investor who wanted to like look at your underwriting? Because part of me is like, I feel like I need to justify but I do have the underwriting and I feel pretty familiar with that behemoth Michael Blanc spreadsheet to navigate if folks want to poke around. But what percent of your people actually want to look under the hood?
So after a while, you can tell pretty quickly by someone's profession. So engineers always want to see all the details. So they want to see the underwriting spreadsheet and dig into the formulas. Pilots tend to be very much like, yeah, that sounds good. I'll do it. They make pretty quick decisions. Depending on the type of doctor, they kind of lean a little bit more towards the pilot side. Surprisingly, they're a little bit less there. So, and then I would also say attorneys tend to be a little bit, it's pretty interesting. They tend to be a little bit less in the details as well. But certainly the engineers, almost of every genre, they'll take the longest to make the decisions and they dig into the most details, which is totally fine. But yeah, absolutely. I've shared, we share underwriting, we share P&Ls, historicals, surveys, anything an investor wants to look into, they can have access to.
Oh, that's great. Which is unlike buying a stock, right? Like you just have to like hope that Apple's going to do whatever they're going to do to increase revenue. This is really helpful. And it makes sense. I used to be like a restaurant server and I don't know why I'm bringing this up, but it's like, you just kind of know what types of personalities you're going to run into just after seeing so many different types of people at table after table after table. And similarly, like when I work in biotech, but I'm on the business side and I get to interact with all these different functions. And so like, that our medical people are going to be more didactic and detailed. And then our commercial people are just going to be more like high level, what's the action? And so I could see where personalities might fit with the type of communication that they need.
Yeah.
So,
So
yeah, no, please.
no, I was just going to say, you just kind of, you start to understand who your network is. And, the first couple of times, of course, you're going to mess up something one way or the other. That's okay. But you'll learn quickly and they learn from you. And I always make a point of saying, like, it's totally fine if this is not for you. Like, I need to make sure that you're a good fit for me as well. Here's this deal, but this is a long-term relationship. We're effectively in business together. And so I need to make sure that, you're a good fit for me. And you say that very, maybe slightly different, but it's 100% true. Like, I have made that mistake of taking someone who wanted to invest that shouldn't, or which just wasn't a good fit. And, we learn through those mistakes and adapt and overcome. So it's, in the beginning, that's hard because you just want to make sure that you have the capital and
Yeah.
you're a little bit scared to say no. But I would, anyone who's starting out, I would encourage them to think about just making sure that that relationship is a good fit for you too.
Yeah. What would you say are some of the red flags in terms of fit? Would it be somebody who is already feeling skeptical or wanting their money to be liquid sooner? Or is it that somebody is using their last dollars of savings and not
Mm.
having more cushion? Like, how did you find out that that person was not a fit?
Yeah. Yeah. It's making sure that their expectations match the investment. And so you mentioned it, well, one of the specific instances I can remember is that person, was was going to be really dependent on distributions, right? And really wanted that cash flow. They didn't really care about appreciation. And the investment itself was a little bit more weighted on, future appreciation. There was distributions through the process, but most of the value came by turning this property around and then reselling it. And so that was a mismatch, right? Was he the wrong investor? No. Was he the wrong investor for that property? Yes. And I could have certainly done a much better job of making sure that the expectations for this specific investment were better laid out. The end result was that he made more money than he expected, but it was not a fun thing because on the monthly basis, right, he was more concerned about that monthly distribution. So I'm using that as an example. I think it's just making very clear and setting expectations. And if someone understands expectations, then you feel very free and they feel very free. And then you can have a great relationship.
Yeah, that makes sense. I was doing the practice pitch with my stepbrother, who's a private wealth advisor. And, he was pretty much saying, you don't lose money in real estate. You're going to get
Mhm.
your money back. It's just a matter of when. And so you
Right.
don't want to burn your relationships or your integrity with people who are thinking, I could just, because right now, one of the deals that I'm working on would be a 3-year exit, which is,
Yeah.
faster than most.
Yep.
But that's depending on the market, right? So if the
Mhm.
cap rate is, lower than the interest rates 3 years from now, we're not going to sell. And,
Mm.
I need to set that expectation of like, this is the risk. I almost want to proactively say, okay, these are the risks so that
Mhm.
and you're informed and then you see how you feel about that.
Absolutely. It's very
How,
freeing.
yeah, that's a good, thank you for, I feel like I'm getting a little bit of coaching about like what to
Sure.
expect or how to feel as things. So thank you for this. And I'm curious for RV projects, what is the typical hold for that or exit strategy?
Yeah. I underwrite and expect 5 years simply because it's just easiest to always compare from a perspective of actual IRR, right? I want to know what a 5-year hold looks like, apples to
Mhm.
apples from property to property. So typically, we underwrite and expect 5 years. However, our running average right now is about 3.6 years
Yes.
for our typical purchase to sale. That is getting longer in this environment. We're holding things a little bit longer. We're also buying assets that we want to hold for a lot longer, a lot larger. I would say, maybe family heritage type of assets as we continue to grow in size. So, yeah, I think that's a long answer, but basically 5 years is how I look at things now.
On any of these, is the exit a sale, but sale to yourself, like, buying folks out and then just keeping it for your family?
We No, not yet, but there are a couple that we're considering that right now. There have there there have been a couple exits where we have sold to a new equity group, but we still are the operators. We still manage and operate underneath a management contract.
Nice. And sorry, this is really granular, but are there different LLCs per mobile home? Or sorry, no, not mobile home, per property RV park?
Yeah.
Okay,
Yes.
that's good.
My CPA loves me when it comes to tax filing season and I
Oh
have to
my
pay his bills.
God. I bet. I bet. So I'll go through a couple of lessons learned. So I'm curious about vetting your partners, the active partners. So I think we talked a
Mm.
little bit about the match with limited partners, but do you have any tips for how you've vetted or picked the right general partners?
Yeah. I would say generally speaking, we don't typically have co-GPs,
Hmm.
right? So my company, of course, we have, leadership in the company and a partner in the company, but most of the time we don't. Like when it comes to if we set up a syndication, typically there's no KPs or GPs besides just us. So that makes it a little bit simpler. But certainly, I don't know how blunt I should get here, but
Please.
when when you're looking for a partner, whether it's particularly in a business agreement, right? Maybe a KP, not so much. If it's a GP, sure. I look at their life. I look at their relationship with their spouse, I look at their relationship with their kids. That's a huge indicator of how well can they work as a team. And so, again, not to be too blunt, but if someone is not able to hold a marital type of relationship, that's a kind of an immediate, red flag for me to really dig in and look at this person much deeper than I normally would.
That's fair. And I actually think that's pretty deep because it's so real. So I don't even think I think it's a completely fair way to
Yeah.
analyze somebody. So I mean, life values and family values, core values need to line
Mhm.
up for you to make a business relationship that serious, right?
Right.
So I think that's fair. So have there been any deals that you've gone full cycle or even are in the middle of that you've had some really hard lessons learned?
Yeah. Um, Today we've gone full cycle on, I think 14
Wow.
commercial properties. Um, Two of those have been RV. So we've gone full cycle on two of the RV. The rest of them would be multifamily or MH. And there's only one of them that we've not hit our pro forma. That one we broke even, right? So that one we didn't lose money, but we did break even. And it was multifamily asset we actually bought in July of 2020, so in the middle of COVID, very distressed asset that we bought. And, what we learned there was that sometimes your process doesn't work. We had gotten pretty good at buying a property and effectively evicting the vast majority of the problems and issues, and then renovating the property, bringing the property back up, and then bringing it back up from a tenant perspective. Well, when there's an eviction moratorium, as an example, right, you can't do that, and so that we got hurt pretty bad there by buying a
Mm,
property and then effectively losing control, of how to operate it via governmental impacts and interference, and not a political statement, just simply we couldn't do what we wanted to do, whether you, whatever the view of that might be. So from a business perspective, that really hurt. And so that was actually a pivotal point for me in the asset class of we just bought our first two RV parks prior to this, and then we're going through this really tough situation with this. I think it was 123 unit, multifamily property was pretty significant. And I'm looking at these two things and saying, wow, this one is keeping me up at night and giving me all this gray hair. And it's really tough and I have no control over it. And it's, eating my lunch. And I have these other things that are really fun and I still
yeah.
have control over. And, if I don't like a guest or they don't like me, they can leave, right? Like literally just start your truck up and leave. And they pay me before they get there and they're happy and I'm happy. And so that became what I learned was maybe I don't want to be multifamily through that
Mm.
deal. So that was a really, really tough one that we had to struggle for. We finally sold it early 2023, so it was a 2-year hold on us, broke even, investors got all their money back, no return, which, of course was a disappointment, but felt very blessed to walk out of that without a loss of capital.
Yeah. Stressful, sounds like. Did the investors who went in on that one, were you able to maintain those relationships, or were some of them like, "I'm
Yeah.
not gonna invest
Yeah.
again?"
I mean, actually the vast majority of them, reinvested into other opportunities that we have now are still there. So I think, key learning point out of that from a positive side was communication is really critical. Again, just sharing, like, it's what they don't like is if you hide something from them or,
Right.
cover it up. So trying to communicate as often as possible. When things go bad, communication should go up. Transparency should go up, and just it is what it is. Get the bad news out there as quick as you can, and work through it. And so I think because of that, and because there's an understanding of the situation, those most of the relationships are still intact and still investing with us.
Way to go. And I think that goes back to the way that you all handled it probably shows it's a demonstration of your own core values and, just keeping people in the loop even when times are tough. And then that eliminates some of the fear and then increases their understanding and, maybe their grace. And so,
Yeah,
if you have integrity in your relationships, then it just fares better for everybody. So I think it goes back to like assess how folks conduct themselves outside of business as well.
for sure.
So this has been really great. I want to get a little bit more as we come to a wrap into what we talked about before we went on air, which is your lifestyle now, which is pretty
Mhm.
cool. You were telling me how you own these really cool RV parks. The term you taught me was it outdoor hospitality?
Yes.
And so I'm new to this. It sounds great. And then you get to go with your family to these different properties. Do you do that before you've actually flipped them, or do you go to experience the nicer
Yeah.
version of it?
All the above. Oh
Nice.
yes. We are trying to change the terminology to outdoor hospitality, which would include campgrounds and glamping resorts and stuff. So I'm pushing that. So yes, yeah. So we, you know, one of the best ways to due diligence. I mean,
Do due
due
diligence.
diligence. There you go. You know what I'm saying? To
Yep.
do inspections is to go and stay there. So very often, if there's a park that we're buying, typically a distressed park is still not that bad, right? So it's it's not the same as a distressed multifamily asset. So yeah, a lot of times we'll pack up, we'll go and stay there for a few days. No one knows who we are and just hang out and camp and do stuff. And then, of course, after we buy it, we'll do the same thing. It's a good way to check on the managers and work with them and help them improve the property. And also sometimes I go do that to instead of driving for dollars, right? There's I would call it camping for dollars. So
Yeah.
a couple of parks we bought, we went and stayed, and I ended up, trying to build a relationship with the owners, and we talked about it, and eventually like, hey, would you want to sell this property? So we bought a couple because we stayed there. So yeah, it's a really nice way to combine business and work.
Yeah, I was gonna ask about deal flow and how do you get that? I would assume some of it's a broker, some of it's
Mhm.
just relationships, but then you can when you stay at an RV park though, how do you even find the owner of it? Like I can't
Well, you
imagine.
can tell. You can tell. I mean, some of the smaller ones, that they can't afford a lot of staff. So if someone's there a couple days in a row, probably typically older, probably look like they're in charge. It's not too hard to
Yeah.
after a few hours of just kind of watching how people interact. Okay, that person's in charge. So they're either the manager or the owner, and you just kind of talk to them.
And can you remind me, I think I heard you say it on the Real Estate Mindset podcast, but you have a buy box that's kind of specific. It's like a certain amount of distance from the interstate and can you just walk me through that again?
Yeah, obviously there's still guidelines, but my target area is the southeast, and that for me is I-40, which is kind of Nashville, North Carolina, Asheville, that corridor, down south of Florida and then east of Mississippi, simply because of the density of population. There's a lot more people in that, section. Maybe not by quantity, but there's not too many places you can find that you're that remote. Of course, it's good weather. It's popular destinations for people up north and out west to come. So always looking that corridor. But outside of that, specific to the property, we like them to be close to interstates, and close to the actual exit. So making that ease of entry and exit, ingress, egress is important to a driver.
Mm.
It's stressful as it is driving this big rig, making sure your entry and exit are relative. Water, right? Everyone loves water. If you're camping, you want to be by water, whether it's just a
Yeah.
river or a pond, lake, whatever it may be, beach. So we're looking for that type of water, type of amenity, either physical or man-made. Those are the big criteria. Size-wise, typically looking for 100 sites or more right now.
Wow.
Ideally, 200 or more, but depending on the location, 100 will work. What else? Yeah. And then
That
looking
sounds
for, yeah, I mean, just looking for places that people want to be.
Yeah, those all sound like places I wanna be. So, bringing this full circle, we talked about how we didn't really talk about money in our upbringing,
Hmm.
and, not that you should I believe your oldest is 9, if I'm remembering
Hmm.
correctly. So, not that you should be talking about money yet, I think 9 is too young. I don't know, you tell me. And apart from enjoying these properties, do you ever explain like, "Hey, dad owns this," or, "This is how this business works." Like, do you ever get into that with them?
Yeah, absolutely. So we actually homeschool as well. And so we have economics classes. I talk through deals with them, at a high level, like, hey, we're looking at buying this. What do you guys think? And their feedback is, well, it's got an awesome pool. Let's buy it. Um, but so, hey, it's part of the customer. So no, we do talk through that. I mean, it's amazing how much they learn, how intuitive it is. So I would say no, start early. I make them go do the lemonade stand so that they can learn how to sell things and how to budget and how to pay me for buying the sugar. So we don't push it heavy, but it's part of their schooling that we incorporate in there, and they get it. Like, oh well, yeah, prices should go up because there's not many of these things left. That's why we can't. They tried to buy something off Amazon the other day, and they looked at it a couple weeks ago, and it was $29, and then my daughter wanted to go buy it again. It was $49, and she was mad, and she goes, well, oh, I see that there's only two left there. So that's probably why they raised the price, because there was only two left. And so it's just
Smart.
yeah. So
Yeah.
I
Quick
think
way to
that's
sell.
super important. We talk about it quite a bit now. Not the like goal, like we want to have this much money, just how it works.
Yeah. And how do you work actually? Do you have is it a 9 to 5 doing all working through all of this, or do you have a pretty tailored schedule based on how you want to show up for family?
Yeah, 9 to 5 would be nice. So as a business entrepreneur, no, it's never 9 to 5. I do have an office, which is helpful, and we have a staff back behind me. So we have a office downtown. So that does give me some good mental space to have a different location and we meet as a team. So that's typically, like I here at 8, probably leave at 5:30 or 6. And then, but at home we'll do like I'll pick days where we do dad school, where I'll take a half day or a whole day and we'll go, I don't know, learn how to build a doghouse or do some type of carpentry, or maybe it's economics. And then I try to take, one or two of the kids at a time with me to work fairly regular or on a trip, look at property or to do inspections and stuff. So they have become pretty accustomed to traveling and going on work trips.
That's pretty awesome. Well, I am loving the way that you're living this life. I think it's pretty impressive and sounds like a great upbringing for your children. Closing us out, do you have any advice for our listeners?
Ooh, wow. We gave a lot of
Put you on
advice
the
so
spot.
far.
You
Um,
have, yeah.
oh, man, it's cliche, but no one no one gets to the end of their life and regrets the things that they've done. They regret the things that they didn't try or didn't do.
Yeah.
And so I think there's I don't know how to articulate it, but there's a certain component of risk that's required to live a full, impactful life. And the reality is that the not doing it is much higher risk than actually going and taking risks that most people would think are risky. It's far more risky to be an employee than it is to be a business owner. Um,
Yeah.
far more stressful, but it's far more risky from a income perspective to get a paycheck than it is to own a business.
That might be the punchline. I mean, yeah,
Yeah.
I think that's what we're appealing to here with our listeners is that many of us are employees, and I don't know that we know how risky that is. So if there's a thing that you're not doing, it's more risky to not do it than to go for it.
I
So
think you should be both. If you can be both, that's the ideal scenario. So I was able to kind of use in the last 4 or 5 years in the Marine Corps, which is a form of employmentship, right?
yeah,
To
absolutely.
then leverage and build a good business. So there was 4 or 5 years where I was doing both, and that's a pretty ideal scenario.
That's me right now. So thank you
There
for
you go.
giving me the encouragement to go on. All right, Robert, this has been so much fun talking to you. I know we're about a minute over time. Where can we find you online?
Sure. So my email is robert@climbcapital.com. And of course, the email or the website is Climb Capital, which is CLIMB capital.com.
Great. We'll put that in the show notes. Thank you so much for your time.
Thank you.
Today's episode was sponsored by Matrix Arch Capital. And you can find me on Instagram at Amanda the Investor. Send me a message. I'd love to hear from you.